So good morning, everyone. Let me welcome you on today's online event. We are glad that you have joined us. My name is Peter Gorecki. I'm a research fellow of the Institute for Foreign Affairs and Trade, and I will be the moderator of today's virtual roundtable discussion. And today we are going to have a topic that has been, let's say, quite trendy since the outbreak of the COVID-19 pandemic early this year. We could hear a lot about how supply chains collapsed during the great lockdown in the spring. So we are going to discuss the recovery and the future prospects of regional and global supply chains in today's event. And first, let me welcome our speakers, to whom I say thank you for accepting our invitation to join today's discussion. I think we have a very competent panel in which academia and business are both represented. So I'm quite sure that we can learn a lot from each other today. First, let me welcome Mr. Prem Ojha, Head of Commercial at Apollo Tyres, Hungary. Apollo Tyres is a major Indian automotive company that has a large-scale manufacturing unit in Hungary, but I'm sure that Prem will tell us more about their Hungarian operations. Next, I would like to welcome Mr. Barna Erdélyi, Chief Executive Officer of Waberer International. Waberer is a market leader company in Hungary in the field of domestic freight and complex logistics services. And last but not least, let me also welcome Mr. Csaba Moldicz, Head of Research at Oriental Business and Innovation Center at the Budapest Business School. And besides this position, Csaba also works for our institute, IFAT, as an external research fellow. And just a few initial thoughts on our topic. Many reports have been written on how the global pandemic revealed the vulnerability of regional and global value chains, especially those that are highly dependent on raw material and intermediate supply from China. We experienced the collapse of these supply chains due to the great lockdown in countries around the globe. And as a result of the crisis, increased substantially the need for more resilience and visibility throughout the whole supply chain, and the need for more transparency regarding the status of suppliers, even beyond the tier 1 level. And I think it's also important to note that the crisis broke out in an era in which supply chains were already going through a major transformation that was driven by technology. The way how companies create value was already changing drastically due to the rise of technologies like AI, like robotics, like industrial internet. And many predicted that the era of classic linear supply chains are over, and we are going to see something very different in the future. So building on this perspective, as a starting point, we are going to discuss three main topics today. How could supply chains recover from the great lockdown during the spring? What's the situation now amid the second wave, especially in Europe and in Hungary? And what trends are shaping the future of regional and global value chains? And before passing the virtual floor to our speakers, let me inform you that our audience will also have the opportunity to raise questions. And I kindly ask you to use the chat function of Zoom program and send your questions to me, and I will collect the questions and share them with our speakers. So that's from my side, and let's take the first question. So how could supply chains recover following the great lockdown during the spring? Prem, maybe you could start, you could be the first one. So what was your experience at Apollo Tyres Hungary?
Good morning, everyone, including the panelists. My name is Prem Ojha, and I'm responsible for managing the purchase and finance function. As you know, we are a tire company, comes from India, and we have started our plant operation here from 2017. And coming back to the question that Peter has raised, our dependency on the China is very, very limited, because we buy most of our raw materials in Europe. And so there are some material that we buy from the Asia, mainly from Far East, like say rubbers. That's actually one of the main component for tires. But yes, from China, we buy some capital goods. That's also very limited. But what did we see in the month of April and May when this pandemic, I would say, was in a very panic level? We had great disruption in terms of even the getting the material from the, like say, I would say from the Thailand and Malaysia. And even the current situation is like this, though the lines are open and we get the materials, but sometimes what happens, we find unexpected delay because, there is so much things happen, and even that is taking a lot of time at the port to clear the containers because sometimes they are doing some fumigations, many other additional processes will be introduced. So what it has done actually, the business, it has really impacted us to increase the what call the supply chain number of days we needed to turn the material from one location to another location, which has a stress some to the extent of our warehousing capacity and as well as our working capital. When it comes from our supply side, mostly we sell our tires in Europe, and that goes through a road network. We hardly use the trade network. And as of now, we don't find, I would say, challenging issues. But when it came to April and May, if you remember, the trucks has to stay on the border for days and days because there were a very long queue to cross the border and very big process. And that has actually pushed us, to have getting to a market where the truck availability was a big issue. So we faced that point of time, I would say, a great challenge to find a truck again when we need. And also, though the market had shrunk that point of time, very small, become very small, but still to deliver the same, it was a very, very big challenge. What happening now, if I talk very especially about the tire market in the Europe, and I mean, when we try to see the stats last year versus this year, still, especially in the passenger, the market is down more than 20%. So though we say we are out of pandemic and like say whatever is the second wave is not so, I would say people are saying it's a bit light and whatsoever. But if you see the passenger car what called market, that clearly shows the people conservatism not to go and spend money. So the consumer spending actually has really impacted because parallelly, if you see the truck segment, you see the agri segment, both are growing in this pandemic. So I would say in supply chain as a whole, I think so for us as of now, we are back to the normal. But once the comes the business as a scenario, because we're a big player in the what called passenger tire market, we still see a challenge because people are a little doubtful about going full out and spending. And same as we also be doubtful that go ahead and make a lot of inventory and keep it, because we don't know how the second wave is going to play. However, the number is very significant when it comes to the Hungary itself, because when the pandemic was at the peak worldwide, the Hungary had a very, very good number. We're proud of it. But when we see the new numbers, the numbers is very high. And but when we talk to the people on the ground, we find out that though the numbers are high, but the severity is very low. So it's not that severe as used to be before, which gives us a bit comfort even to run our plant or our warehouse. But I would still say that we are not out of it. Probably we need another 2 quarters, not a 1 quarter, because December sometimes can be a bit misleading because of the Christmas push or something, because people have not gone out from the very long and they can do some extra spending. But I think we need minimum 2 quarters to see how the supply chain or the market is picking up, and especially from the consumer spending side, because if the consumer cycle does not start, doesn't matter whatever we do from the industrial sector, it has to stop one day, because consumer cycle is actually a demand creator. And when we see ourselves from how we link ourselves, like if you go in the banking, they see the credit card usage, how people are using or retail sales. Similarly for us, the passenger car sales is one of the very big indicator how the things are moving. So I would say as of now, we are still cautious, but at the same time, I would say we are back to the very comfortable situation, not the very normal, but very comfortable situation. in last quarter, I would say last 3-4 months, where we think that now things are getting in the right directions. It is just a matter of time when I would say the small amount of fear and I would say clarity needed in the mind for business confidence to go for a further expansion, in the supply chain, like say building more warehouses or expanding the capacity, which requires some time to go forward. But at least to turn around with the current facility, people are not having any doubts, and we are going ahead with it. So that's the summary. I would say how I would see from a tire company or an investor being in Hungary. You unmute, Peter.
You are muted.
So thank you, Prem. And I now turn to Barna. What was your experience at Waberer's the spring and when those restrictive measures were eased in late May or early June?
Yeah, first of all, welcome and good morning to everybody. I am happy I could join this this panel discussion. Yeah, I mean, in Waberer's, I would say that it is important to know, as it was already mentioned by you, that we are a quite strong market leader position in Hungary, especially in the retail sector, and we are really focused on food supply chain, but serving also other industries in Hungary. And beside that, our international transportation position is also quite strong. We are still one of the biggest road transportation company within Europe, with our more than let's say 2,000 trucks running on the European roads. And as such, I would say that we are in a sector which was seriously affected or diminished by the COVID in the springtime. Not as much as tourism or such other industries where a full stop was the situation. But I would say that we are in the middle somewhere with a serious effect, but at least having a chance for operation. I also would like to add that we see that regarding the sectors we are serving and regarding our domestic and international business, the situation is quite different. It was quite different, and it is still quite different. So I don't think that there is a very general picture about the situation, but we have to separate the situation sector by sector and market by market. So all in all, what we saw that in the international situation, after having the restrictions, there was a quite big lockdown. So in the international transportation, from one day to the other, like 40-50% of the market disappeared. So that was the situation in March or April, and actually, as a quite big market player, we measured in our figures exactly the same. So I wouldn't say that we are representative, but I know even from our competitors and what we see with our figures, the drop was like 40% at least. So based on that, at that time we had to stop roughly 35-40% of our international fleet, which you can imagine that it's a quite big stop. And of course it was on purpose, because that was the time when I mean, a lot of factories in the EU and in Hungary also had a production stop. And of course, when there is no production, then we do not have anything to transport. So that was the very simple situation. And I mean, of course, I forgot to mention that I can talk more about regional and local trends than global. So that's what I will do. So after that, or beside that, what we see in the domestic market, that was quite different. So of course there was a shock as well, I would say that it was also there was some big factory stop, especially in automotive in the western part of Hungary and other factories also. But actually there were 2-3 opposite or different effects on the same time present. There were I mean, from the consumer goods point of view, there was an artificial demand because of panic, which had a positive effect on the volume. On the other hand, the threat or because of the fear regarding the future, there was a drop also. But all in all, the volume was very similar to the usual one. So that was, let's say, the March, April, May situation. After that time, what we saw, that there were some industry where the recovery was very, very fast and quick. And now from that point of view, I do not see a big difference between the European market and the regional or the local one. I would say that the recovery was quite quick, except the automotive industry. So actually, I have to mention that we are serving beside automotive, I mean, the retail sector, construction, other parts of FMCG. We are transporting a lot of electronics like refrigerators and TV sets, and from all aspects we see that there were quite a quick recovery, except automotive. Even there are some sectors, for example, the electronic type of goods, where the demand is actually bigger than it was ever. So it seems that there are some winners of this story also, because let's say the spending structure of people are different from the previous one based on the limitations. So how we see that the domestic market and also a quite visible part of the international transportation market was already back in June. However, and now I come back to the automotive, what we see that except some factories, the recovery of automotive ended like end of the summer. So still, I mean, till end of the summer, it was very, very hectic. Even now, it is quite difficult to predict. But now we see that since September is back. On the other hand, it is very difficult to see, and I am sure that my panelist colleague know much more about that it is very, very, very difficult to see and separate the different type of effects, like what is the size of the volume or what is the share of the volume which is because of a late production of the first 8 months of the year, and which is the real demand, what we can expect to have in the future. Locally and in the domestic market, I would talk a little bit about the consumption, what we see. I mean, we are the transporter of the big food chains. I told you, I mean, all of you go to these food chains day by day. Of course, I cannot mention their name. And what we see that let's say the market is not bad, but more or less we measure a 10% volume drop, comparing it to the normal or the previous year level. And last but not least, what I would also mention that this pandemic situation had an effect also on the let's say on the transportation service volume side. What do I mean? Actually, since March, from the road transportation market, roughly 20% of the capacity disappeared. So because of bankruptcies, because of fleet decreases, because of issues on the European market, what we see that 20% of the capacity is gone. And actually, currently, when we are in a quite good season of the year, this 20% drop and let's say the recovering volume combined with the new wave, what we will discuss a little bit later on, has a combined effect. So nowadays we see parallel lacking volume from service side, meaning in some regions of Europe there are not enough trucks on the road to serve the client needs, and based on that there are a lot of tensions present. On the other hand, still in some sectors we see a drop or a lower volume than before. And I'm quite sure we will come back to this topic later on, but I have to very agree on the statement of Prem, meaning that we have to wait till we will see that what is the new normalized volume of the market. Because currently, on one hand, because of the delays and because of the let's say not normal structure of the first 3 quarters of the year, we do not see it. Secondly, there are a lot of measures from government side, not just in Hungary but whole Europe, which are artificially influencing the market itself. Of course, on purpose to give the chance to the economy. Not to let's say decrease dramatically, but this is also a reason why I don't see now we see what is the real recovery we have in Europe and in Hungary.
Thank you, Barna. Csaba, you come from an absolutely different sector. The two gentlemen represent the business sector, and you are a researcher. Do you have any thoughts on or any data you can add to what we have heard in the last couple of minutes?
Good morning, everybody. First of all, thank you for the opportunity to being in this panel. And yes, so the question was what happened to the global supply chains after this great lockdown. So obviously there are two things, at least to my mind, that we have to distinguish. On the one hand, we had an external shock to the economy, which was caused by these total lockdowns. But there is another channel too, which must be mentioned as well. So this shock was exacerbated by growing geopolitical tensions in Chinese and American relations. So there are these two lines, so these two channels which bears mentioning. So when it comes, and I totally agree with Barna when he says that we don't know the details. We don't know every detail of this story, and there are probably many months to come, or even many years until we get the whole picture and understand the story. In this question, I guess the latest forecast of the World Trade Organization can be guiding us to get some impression of the extent of these great lockdowns and their effects. So according to the latest forecast of the World Trade Organization, so the overall volume of trading goods across globally is forecasted to fall by 9%, 9.2%, which is going to be, at least according to the forecast, which is going to be followed by a rise of around 7-8% in next year, so in 2021. And to have an analogy, I would like to remind you that we had a similar contraction in international trade in 2009 after the global financial crisis, and the contraction was 11%. This is one thing, so that's where we can get a little bit more to the whole picture. And it's very interesting when you look at the forecasts when it comes to the different regions. So the World Trade Organization says that the fall of international trade is going to be around almost 15% in North America. In Europe, almost 12%. And when it comes to Asia, just 4.5%. So this is also an important aspect to distinguish the differences, or to see the differences when it comes to the different, let's say, the major hubs of manufacturing. And I said that this shock was exacerbated by these growing geopolitical tensions in Chinese and American relations. But what we have to understand that this is not new in that sense, that the United States made this restructuring of global supply chains into an explicit goal much earlier. So this policy of reshoring or onshoring or so this is not new. And that was one of the main promises of the Trump campaign, actually in 2016, not now. So that was to strengthen the domestic manufacturing sector. And since then, the US Commerce Department of State and other state agencies in the United States have been trying to give incentives for, now we can say for years, in form of subsidies, tax breaks, reshoring subsidies to firms to reallocate their production, and which is obviously completely in line with this policy. So the question is, if we go back a little bit before the COVID-19, whether this policy had any impact. And if you look at the so-called Kearney onshoring index or Kearney China diversification index, which tracked the rebalancing of US manufacturing imports from Asia and from China to other countries, or to, in case of China, to other Asia low-cost countries, what we can see is this is a process that started actually before the COVID-19. So if you look at these indicators, you will see that the first year when you can see the drop in the Chinese share in American global manufacturing input, this is 2019, so not 2020 or something like that. And this is one element, but at the same time, so I must admit that it is not easy to assess, to evaluate this data, because if you look at, for example, at the question which country was the biggest beneficiary of this process, then we can point out Vietnam. At the same time, so you can see that the export between China and Vietnam grew by around 80% in 2019 compared to the previous year, which it is easy to draw the conclusion, which means this is a kind of, let's say, practical response to these tariff barriers, to these new instructions on Chinese goods. And moreover, there are many Chinese firms that have subsidiaries in. So this is repackaging, etc. So I think it's not easy to see the whole picture, but what I would like to emphasize that there is a shock, but this shock actually tipped the balance to a direction or to a trend which was already there before the crisis. Yeah, thank you.
Okay, just one question to what you have shared with us. Maybe it's not linked directly with the topic of supply chains, but you mentioned that according to WTO data, the drop in Europe and in North America was much more severe compared to the drop in Asia. And what's your opinion? And I also addressed this question to Barna and Prem. What's your opinion? What's the reason why Asia could be more resilient, or Asian supply chains could be more resilient compared to the ones in North America or in Europe? What could be the reason for that?
So the original growth rates, if you compare these three regions, were initially higher in Asia. And obviously there is also a drop, but again, going back to the forecast, the IMF also issued a forecast for this year, and there is only one of these, let's say, major economies that can show positive growth rate, at least in the forecast, and this is China, which means that the resilience comes from still a very strong demand from the Chinese market.
Okay, Barna, Prem, do you have any thoughts on this question? So what could be the reason that Asia can recover faster than Europe or the United States in terms of?
So just to continue what Csaba said, And as I come from India, so I felt see 2009 and even now, what happened? The share of domestic consumption is very high to the economy, and that actually is largely, I would say, not get affected very much in the same proportion what's happened to the West. So in 2009 even, yeah, India used to, it never went to negative. And even so, before pandemic came, and banks and everyone were talking about having the next global slowdown. Pandemic has made it worse. So okay, so we have to separate that, always what is impact of pandemic and what is the impact of the slowdown.
Mhm.
But yeah, coming back specific to your answer, I would say there are two things. Since these countries are still, in a developing phase, a lot of countries, and they have a high population, so they have a high domestic consumption. And same time, whenever you get into a crisis, and when you see, it gives the opportunity for a big player who are established in all over the world to shift some production from one location to another. Like, say, if you see in the recent news, even Michelin, and if you see the Continental in the tire industry, they are shifting some production from the West Europe to somewhere else. So that happened, and most of the time the flow goes back to the Asian country. Especially coming to the India point of view, if you look at the recent news and things, India has much bigger capacity than anyone can have in terms of the drug manufacturing. So all type of vaccine and things. So that's another big thing is that. However, China was also producing, but what happened due to actually what called Java highlighted, US-China relationship. Now a lot of facility has been shifted to India, and the same time the Indian market has also actually expanded themselves. So I always, if you ask me in general, whatever happens, whenever the time of the crisis, if I see, I always see those countries who are still in developing phase, means they're very cost competitive, or they have a very high consumer base, they will be getting the market share worldwide in terms of manufacturing. And that is going to continue for a few decades. It's not going to be stopping today and tomorrow, till the times the level playing field comes from all over the world, like the cost of manufacturing in Europe or in the US are, comes very close to the cost of manufacturing when you do in China or into India, for a sake. So it's a very easy situation. Some I would say companies, again I don't want to name it, but they actually look for the situation when this kind of shutdowns or global slowdown comes. They use that to advantage to shift the strategical production shift as well. So and in terms of, if you see like say for in terms of the GDP contraction, I've seen in India first time more than 10%, going down as a negative. But if you look at the swing, is that we are going to go back, and in the next year we are expecting more than about 8% plus. So the swing is really a V shape, and that was we told by the economist earlier as well. But recently we had our central bank meeting, and they have confirmed the same. It looks like the recovery is happening much faster, and people are very hopeful of the vaccine. As Barna said, I still agree to that point. We don't know to the what extent the market have changed. There are many sectors have changed for sure. We don't know that what extent, but have changed. Let's take an example. I told you public transportation. The large amount of people are very comfortable to work from home. Work from home is not a new concept. It's a concept all used in Europe, or I would say to US. In India, if I see around about China, it's used largely to the only software companies. But now almost all companies are using. It has an impact on their spending, be it in automotive, be on the tires, or be whatsoever. So it is going to play a very different roles. Look at the paper industries. I see some paper industries are still struggling because, and even in the operation I see, because earlier people used to be that very much specific about it, going to office using the papers. So there are some industries who will see very big knock. When it comes to the one of the most affected industry, like say tourism, or the, I would say the more like say restaurant and hotels, these things, my personal view is that they are temporary. I would say temporary not means that couple of months, but I would say short term. maybe couple of quarters, because once you go back from your problem, things you sorted out, you cannot stay at home. You need to go out. So the tourism, like say, one of the most hit what industry was the airlines. So this they will be back, and they will be back with a bang, but it will take time. People need to be assured. I just don't want to go for a holiday, or don't want to go for a business trip. I'm coming with a big risk. But how I am after that, getting a double test done to make sure I'm negative and things. So it is going to come. Those industry will not change, despite they were most vulnerable to the pandemic. But they will be back with the certain industries, very traditional things which we are used to do. Pandemic has actually challenged us in many ways. Various things we used to do, before pandemic, where the physical meetings were important, or also the way of working, expectation from the people, things have changed. So we will see those changes, and only afraid part of it is that a lot of things which I am going to see, I'm expecting the state to change. They belong to the consumer spending, direct and retail, not in I would say in capital sector, mainly in the retail sector. And which is the little bit of, I would say, sad news, because that ultimately will actually pull down the growth comes from other sectors. So ultimately, if the retail spending is lower, doesn't matter whatever we do, how much stimulus has a limitation. Many countries have gone for a stimulus. Early, we have, I think in Hungary as well, in one of the meeting, people was clarifying they have gone up to 25% of the GDP to give schemes for the industry to come back, there were various schemes from April till June, July by the government. But there is a limit for stimulus. I see in many countries there is a last bit of stimulus are coming. Why? Because the government had given almost everything, but now they are looking a bit sure that this is not going to be second wave very big. So let's spend to the last pocket to bring quickly back the economy to the wheel. Let the wheel moving. So these things are happening, but I would say I don't see any government plan and something coming in 2021. We will be out of pocket. So whatever will be this. So that means in 2021 we are going to see literally a real demand, a stabilized demand after changing of industry. What have changed? What are natural demand? So far I think it's better to be a bit cautious in terms of the capex when you go for industry side, but yes, same time you should not be so much conservative that the market is back and you are not ready for it. So it's actually a challenge for people to evaluate every time. I would say every second week or in a month very very closely how the market is turning for future capacity expansion. This is how I would summarize.
Okay, thank you very much. And before jumping to our next question, next topic, let me share a question with you that we have received from one of the attendees. The question is that, are there signs that Central Europe can benefit from the current crisis in terms of relocation of certain industries to Europe? I think it's a very popular question for everyone in Europe who deals with investment promotion. What's your perspective on that? Shall we see a huge wave of relocation to Europe, and can Hungary and Central Europe benefit from this trend, or we are going to see something different?
I would not see that. I understand the question. It means like, say, you stop believing on the global supply chain network. Currently, if you see, no country are independent. It's very globally spreaded, and they use each other's, somewhere the services and things. So if you ask me, especially towards the Central and Eastern Europe, I would say they would benefit to the large extent. But entire as in Europe, probably no, because what I would see that the some shift from the West Europe to coming to this side, or maybe something comes from the US. But I definitely not seeing if someone today has a supply chain network, which is the biggest part of the requirement coming from the Asia or any other part of the world, they are suddenly going to change and look for less produced in Europe. And what I would say, the calculation financially is very simple. Let's presume there are two components for a product: there is material and there is services. the material component almost remains same in the worldwide. And if you move from one location to another location, it costs you 3-4% of the money of the, as a freight. You can move anywhere in the world. But what about the services? We know that because of the quality of life and the cost of living, the services in Europe are the most costliest in the world. So simply, unless we say and we think that the global supply chain terms is not going to work. We seeing after 1 year, 2 years, that will be independent countries, and there is really a regulation coming from the EU on the starting through the anti-dumping slowly. I don't see in general, if you don't do any this kind of action, shifting any kind of the new market within Europe, in Europe from the outside. Yes, within Europe is possible.
My opinion is that even for that question, you cannot give a very simple and uniformized or standardized answer. So what we see, for example, in case of the food chains, that some movement and some changes were very quickly there. So actually, at that time when all the borders were closed, then all these companies had to let's say search for sources which were locally and below the same brand. In some cases, without recognizing it, all of we bought let's say salamis or cheese, which at that time were produced in Hungary and before in somewhere else in Europe. So whether it stays or not, of course, all of us hope that yes. I do not see a very clear picture on that, but I have to add that there are already some signs. On top, we also have some examples in case of some of our customers where either based on the lobby activity or based on the different government subsidies, which are also different between the different countries of the European Union, there are already some winners. So I could give you example even from Hungary, where all the production capacity was reallocated to the Hungarian plant from other European plants or from other plants globally. I mean, again, whether it stays or not, we do not see. We hope, but already there are some steps. The long-term story is a big question mark, and from that point of view, I am with Prem that I do not think that the global supply chain from today to tomorrow or within 2 years can be stopped. I mean, there are a lot of conditions and circumstances which are not there. So on one hand, I mean, moving the production from Asia to Europe or vice versa it doesn't happen from 1 year to the other. And from that point of view, let's say the 6 months we are talking about regarding this crisis, it is just nothing. So it is too short to have the final consequences. On top of that, what I see, and this is also for us an issue we have to live with, is the workforce or the source of the labor. So we are talking about the goods and production, but there is a labor market issue as well. So actually, a lot of, I mean, I know that there are big differences between Eastern European countries also. But after a certain level, the unemployment rate will make some barrier, and also the cost of the let's say the workforce. So actually, in March, April, I personally thought, and of course maybe it is my mistake, that there would be some normalization on the wage inflation because of this shock what we have, and because of the changes on the labor market. Currently, that is something what I do not see. And I also have to add that because of having again border controls, which are not limiting in some cases our movements with the trucks, but are limiting the movement, or at least making more difficult the movement, the labor force between non-European and European countries, and in some cases between European countries also. I have questions. So definitely everybody or every big production company will try to maybe not shorten the supply chain, but at least diversifying the sourcing, or making some risk assessment and risk management. And from that point of view, either the stocks in the warehouses, or having alternative sources also in Europe and in Asia, or other global locations, we will see. And yes, I think that Eastern Europe has now again a chance, but I don't think it will happen very quickly, and I don't think that it can turn the basic logic of the current supply chain just because of having this crisis.
Csaba, any
Yes.
comments from your side?
Yes, thank you very much. Sometimes it is very good when we have panelists with very different ideas, but unfortunately, this is not the case, because I must agree on many points with Prem and Barna. So when it comes to, first of all, to the idea that things won't happen during the night. So if there is a change, there will be a gradual change. And this is also a question how different countries respond to the same question. So if you look at, for example, Europe, then you have different extent of response to that. For example, in France, on the one hand, the French president Macron argued that we should produce more in France and also rebuild our national and European sovereignty, etc., etc. But at the same time, there's a kind of verbal intervention. And the same did actually the French finance minister, who urged enterprises to review their supply chains in the light of the experiences, and singled out actually two sectors, the pharmaceutical sector and the automotive sector, which is also a very important point. When we speak about this change, then we should again distinguish based on what sectors we are speaking of. And when it comes to the Hungarian opportunities or the chances, then obviously the first, so we should look at Germany. So what is happening there and what is the response there? So according to the German plans, they are going to adopt a supply chain law in the third quarter, or in the fourth quarter of the year. But the idea is not uncontested. So there are opponents, obviously the Federation of German Industries, the Confederation of German Employers Association, etc., saying that this kind of supply chain must be somehow restricted, because let's quote it: a practical supply chain law must not impose obligations on companies that even our federal government is unable to enforce in agreements with other countries. And this is a very important point here. So the limitations or the maneuvering room of politics is also restricted somehow. And when it comes to Germany, that's what we have to understand, is that China is not only a production site. So China is also obviously a market. And moving away the production side from China can have, let's say, negative effects on sales. It is much easier to serve the market if you are there, if you produce there, than export the same goods. So this is somehow, I think it's very important point here. And if you look at the German, let's say, reliance on the Chinese market, it is extremely high, especially if you look at the automotive industry. So every 3 of 10 Mercedes cars is sold in China. Every 4 of 10 Volkswagen cars is sold in China. So moving away production side, it also means losing the market. And this is a question whether they can do it or not. So this is why I'm more skeptical about it. Would be nice and I would be happy about that, but I'm more skeptical about Hungarian, let's say, chances to attract more capital because of that. So in this case, I would say the economic needs of the German economy go against these pressures, and I don't know, and I wouldn't like to forecast it. So what will be the ultimate German response when it comes to foreign policy? Then you can see some signs that they try to review the situation. And one of the signs, at least to my mind, is that the German issued an Indo-Pacific strategy last month in September, which is a very new idea, since so the term itself, Indo-Pacific, comes from the American foreign policy, and this concept, this whole idea. And obviously, if you look at the strategy, then this is much more cautious than the American approach. But still, the idea itself that the Germany focuses on these issues is somehow new.
Thank you, Csaba. And now maybe let's take the topic of what can we expect from the future. In my opening remarks, I referred to those technology developments that have a huge effect on how the value is created at the corporate level and how regional and global supply chains work. I would like to hear your opinion. What trends will shape the future of supply chains? I'm sure that we are going to see a lot of turbulence in the near term, but maybe we can now look on a little bit further on the middle run and the long run. So this is my question. Who will be the first to answer? Prem, maybe you.
Yeah, I would say, in terms of for future, especially for value creation, there is a good scope, because if you see as a consumer, when I see the market, and actually I have worked quite a long time in Africa. I have also worked in India, and from last 5 years I'm here in Europe. So European consumers are one of the best payers, for services. And if we see, there is any way that we can cater better, whichever way required, and whatever product, including the services, not only I would say the goods, and then there's a big scope. And I'm coming back to, I'm trying to link this with the past question, which was like, say, what can relocate back to the Europe? And this is what very relevant. What I see here, still I see Europe, we are one of the big leader in the what called technological advancement for the industry need, manufacturing or any kind of industry need. So I see from the Germany or from other countries, there are a lot of technical advancement happening, and that is being used by all over the world for in many factories and things. So there I see, when we get into pandemic and where the things have been challenged, the way of working out, and the people employed in operations, and what we can do there, the factory, something called the new discussion these days happening is called Industry 4.0, where everyone wants to move the one ahead. And if that's the direction, when the people becoming costlier and costlier, and also the availability is an issue, industry, if we go take an industry to that direction, I think the one of Europe will be one of the biggest what called advantage position, because they have a very I would say they are long steps ahead than the any other country, who can provide you a lot of automation and a lot of industrial solutions, which are a soft solution, but actually replacing the hard solutions on the shop floors. So there, I have a limited view in terms of the automotive, I would say. So don't have a very deep understanding about the real supply chain into the very small level. But whenever I see this manufacturing and automotive, I would say here we are going to gain in Europe. We are going to gain a lot, And that will be more like, say, technological advancement, and there will be IP generation here in coming 5-10 years, and which will be bringing you the value added services back to the Europe, and the demand as well for that. But when it comes to pure, like say, cutthroat supply chain of the goods, and where the market, like say, when we talk about the things which can be made anywhere, I don't see that those kind of production and supplies are coming back to Europe just because the COVID has created some problem temporarily. That's my view on it.
Thank you very much. And Barna, what's your perspective or expectations? How will future trends and technology development affect your business?
Yeah, I mean, I wish I would know. No, I say this. I'm telling this on purpose. Actually, how I see that, and a lot of pieces of this opinion was already mentioned by all of you. Actually, somehow I believe that first we have to survive the short-term effects, and then we will see the direction of the normalization. Why I am saying that? Because I am fully with Csaba that now we are talking about the pandemic, but actually we are talking about a combination of this unexpected virus, let's say, pressure or crisis, and or with a combination of the political, how should I say, political tension was already there on the market before the pandemic, plus the slowdown. And actually in Europe also now, I have to tell you that what I see is a complete chaos. So actually, and I really don't want to bore you with Brexit, because that can have a big effect on the transportation market. I mean, just imagine, I mean, in a quarter, we have something with the UK. We still do not see what is the real situation of the or the real effect of the pandemic. Governments are artificially postponing the effect of the pandemic, and all of these effects we will see next year. And I know that you would like to hear an answer for the long-term effects, but what I see that first somehow we have to survive and manage this this shock, and then when we will see that what is the new basis, then we can plan. Of course, I don't say that we shouldn't focus on long-term stories, and I believe that Prem mentioned it rightly, that definitely Europe can win with the value-added stories and with AI and the new technologies. And actually, even on transportation, we expect to have a big effect on the market of these new technologies. I see from that point the logistic and the transformation, which has a quite big potential and opportunity in it, which I believe that will I would rather say that restructure the market quite deeply. I expect to have a consolidation. I still expect to have some shortening on the global supply chains. But as the demand in Asia is so huge, I mean, it will still remain global. So, but once again, I don't have the crystal ball, and neither of you has it. So I really believe that first we have to see the next 5, maybe 7 quarters, and then we see that which direction we can follow.
Thank you, Csaba. Any comment from your side?
Yes. So usually when I ask about the future, I often quote my favorite economist, John Kenneth Galbraith, who once said to this kind of question that the only purpose of economic forecasting is to make astrology more respectable. But I wouldn't like to avoid the question. So I guess there are 4 factors again that it's worth distinguishing. First of all, we said that China is not only a production site with relatively cheap labor, it's also a market, but we can add actually a third factor as well. It has the knowledge, which help the country to grow a tight network of firm clusters. So when we speak of moving manufacturing home, it not only means, let's say, giving incentives from the politics to one large enterprise to go back, but also moving back, I mean, it's in theory, hundreds of thousands of firms to Europe or the United States, but it's obviously it's not the reality we speak of. So what we can see right now, so how global supply chains are shaped, is the product or the result of the last 30 years economic development. This is the first factor. Secondly, reshoring or nearshoring opportunities are quite limited in Europe, since besides Central Europe, there are not so many countries around the European Union that would be able to attract and handle this kind of production. In some of the analysis, Morocco is pointed out as one of the few places where really low wages can be combined with a relatively safe political environment. And thirdly, so the attraction of the Chinese market comes not only from the site, but also from the strength. So if you, for example, look at the automotive industry, so in August, the recovery was around 15% compared to the previous months or to the corresponding months in 2019, while the European market crashed by 15%. So in this environment, it is relatively difficult to move away from this market. And there is actually a fourth, let's say, fourth factor, which we haven't discussed. It is also interesting topic. So what is the reaction of China to that? And nowadays, if you look at the news, then this phrase dual circulation strategy is there in the headlines. We don't know actually what is the real content of this dual circulation strategy of the Chinese. Some analysts say that that is a kind of phrase for protectionism and inward-looking policy. If it were true, I mean, this interpretation, this assessment, then it's a very, very bad idea and it's a very bad response, but we will see it in the future. Thank you very much.
And we received another question from one of the attendees, and I think it's quite a special one. I wonder if you can have any comments on that. Maybe Prem, this can be addressed to you. So the question is, could you tell us some details on the trade of the raw materials between India and the African countries?
Mm-hmm. So actually, as explained you earlier, informed you earlier that I have worked for quite long period in Africa, in South Africa actually, and come from India. So this looks a bit relevant question. I don't have an exact data what's happening now, but 3 years back, 2017, when the last I read the trade report, the India is the net importer from African country. In India, import is close to $36 billion versus the export $24 billion. And what they import mostly the petroleum products, which are about 40% plus. And then after they actually import the gold, India is one of the biggest market for the gold. People like to buy gold. They see as a jewelry, the same time they see as a saving. And the third thing, they actually import the product coming from the mines, like say ores and the coal and like that. When it comes to India, India also export the petroleum, luckily, so petroleum products. So India imports about 40% and export about 10%. So the petroleum products actually, I would say, bilaterally goes from both sides. Then the India export, the second biggest thing I told you earlier, India have a very big capacity about medicine. So the medical equipment and the medicines. And the third one plays a role in India export is the vehicle. They are exporting some vehicles, especially the vehicle who are suitable for off-roads into I would say, to Africa. But yes, when the question was mainly about the raw material, I would say the India biggest, I would say, is the actually petroleum product which actually, is the biggest chunk of what Africa export to India. And that is about 45% of the 32 billion of the import yearly, number wise.
Okay. As we don't have any more questions from the attendees, I think we are going to stop here. We have touched a lot of topics, and I think it was a very fruitful discussion. And just to summarize a little bit what we have heard from you today, I think the conclusion is that there's a perfect storm ongoing in the global economy, and that affect the global and regional value chains. Very challenging combination of the virus, of the economic slowdown, of geopolitics, and we have plus the Brexit here in Europe. And what we can say for sure now is that we have to wait and see what will be the new normal of economic activity, of market demands. Most probably we are going to see some relocation to Central and East Europe and to Europe. But on the other hand, it also makes a lot of sense, and there are major arguments for maintaining manufacturing activity in China or in Asia. So at this moment, we don't have general answers for every kind of questions. I say thank you to our panelists, to our speakers for accepting our invitation again, and for sharing their very valuable remarks on this topic. And I also thank you for our audience for joining us today in discussion. We are going to move forward with our events, our online events next weekend and in the coming months from IFAT site. So please join our next online event as well. Thank you again.